Okay. Let's see what we got here. Yo, what's up? I'm gonna be right back. I need to get some water real quick. Hold on. I'm not going far. Hello. How's it going? Yeah. We'll talk about what's up? We'll talk about AMC for sure. I'm not at all surprised that we came back down after coming back up to near 350. This is the same chart I had on last week when we did our last video. We do probably want to kind of figure out what happens next in terms of this setup, but this is about where I thought it would go and then come back down. So yeah, this is distributive action here on this top, you know, and it's simple stuff. You broke the downtrend. I'm gonna do a measurement that has been working out pretty well. It's been a fairly consistent way to measure, and it's using that sine wave theory that we have been using. I have voice cracking. Just drank some water. Yeah, that volume's interesting. The volume profile here. I think I'll use this chart today. It's probably not as messy. Really, you should use both of them because of the way I did this, but yeah, it doesn't matter which one we use. So this to me looks like a hook and rejection right there, but I don't think that I think the bottom, we're in a bottoming process. So if you're like worried about AMC, the Stockfather thinks we're going to go down to the ones, 150s or something by the time we get down to, I mean, I don't know, it was something real low. By the time we get to earnings, it's not impossible. I just think that we're in like a bottoming stage, and I'm not so sure. I mean, everything so far has been fairly predictable outside of how low we've come. You know, I thought we'd stay in the mid threes at first, and instead we came down to the 250s, which is kind of funny. I've made jokes about it, but I think there might be some reasonable way to say that. Remember, like a long time ago, when we were way up there right before the reverse split, and we started that 10-month long kind of, it was like a bottom, but it was a really long range. It just sat sideways for like 10 months in the end. You remember that time period? That was when I got the 350 and the 250 target, and specifically that 250 target was like kind of an ever-present target. And at the time, everybody was like, it's never going to 250, yada, yada, yada. It's the same thing every single time you call out a low. And I mean, I'm not being mean about it. It's just, there's always a reason why you wouldn't go that low. So there's always going to be a reasonable explanation for people like, oh, well, market cap won't let it go that low or this or that. But, you know, it's managed to get there. And one of the things that I've kind of contested about, and I'm starting to believe it more and more as we've watched AMC over the last 2.5 years, is that there's always a target, right? And the target is in the chart. I believe it's there. I think that the bullish and the bearish target are always kind of battling it out, you know? And I've talked about how it's kind of like an arrow where you're sort of pointing a certain direction and you want to go that way, and sometimes you got to draw the string back before you can get there, but it's always moving forward. So if you pass up an opportunity, you know, it's a question of sort of supply and demand, that tug of war, and who's really in charge of the price action. And I believe it more and more as time goes on, because those targets I got were like a year ago. And I know that that's going to sound really self-serving, because when somebody says something like that, especially unfortunately in the AMC community, it's usually to like puff themselves up. In my case, yeah, I could do that, but it's more like I'm not going on Twitter to talk about it. I don't have Twitter anymore. I mean, I have one, but I don't use it. This is kind of the most reach that I'm going to have outside the Discord group, which is a really small group. So I'm not here to like puff myself up and make myself sound like better than I really am. But the idea of like, oh, I found this 250 target a year ago and was like talking about it publicly and all this stuff. It's funny to me now, but it's not even like surprising at the same time, because I'm like more and more convinced that those targets are that's the direction that a bear wants to go, and they're continually targeting the same place. That's the direction it's going to go until a bull steps in. It's like almost common sense. So at this point, nothing would really surprise me very much. So looking at earnings and this trend that we're on right now, and it's kind of a weak trend, but it's there. Let me see how far, if this touches anything else. Kind of, from like way back here. This is like original downtrend where that was. So I think it's a fair trend. So this trend that we're on right now, I think is possible. If we got low again, we could come down to like 210 at earnings. You can see that's the intersection. So that's one thing. That seems possible. I know we talked about 190s. I think the number on the screen last time was 190 to, what was it? I thought it was on the screen. I just don't have it now. Like, what happened to it? I don't know. I wrote it down. But maybe I didn't. I'll have to go back to the Discord group. So it was like 190 to something else. And it was like to 250. I don't know. It was a kind of everything that I had done looking forward to see if I could figure out where we would probably be in the next few weeks, and those were the numbers I got. So we're kind of in that ballpark, heading down that way right now. I'm not overly convinced, or I would say that I'm not like hell-bent on us having to be here or here at earnings. It's just intersections. It's just targets. It's like anything else. So do I think that we could possibly come down and find support higher than 243? Yes. And it's not hard to conceive why that might happen. The same thing happens on a lot of these downward motions. You get a push, you get that auto reaction, and then you find support higher. So if we were to find support higher, we could probably figure out where that would be pretty easily. Because usually it's like the first major touchback after a big, let's just call it V-shaped bottom. It's like, where do you first find support? And you can see it's right there. And I'm going to guess this is like a fib. So let's see here. Hang on a second. It is, the back says the low is 276. So I think that's probably it. It looks right to me. So there's two targets in mind right now, 276 down to 210. They seem pretty likely that you might find support on one of those. And yeah, you might say, well, why not the very bottom? Because I don't think this is like, how do you describe this? Like the first reaction is like the selling climax. It's almost never the support, if that makes sense. It usually gets close to it and then finds a support around it. And that's why I'm saying, like, this first reaction here, and then you can see that second big buy-in, it happened after we came back down to 276. So that's my guess, and I think there's a decent chance here that this is some kind of fib level. And I was right. So 276 is the... I can't get that one to snap, can I? Yeah, I can. 277 is the 618. So is that a logical place to come back down? Yeah. You can see that liquidity-wise, there's almost always hits. It's funny how that works, right? It's like, how could you possibly know? Well, there's such a thing as like a fib extension. So when you do the measurement on a fib extension, it would give you possible future support levels. Yeah, she's home. And you can see it. It's evident, self-evident. So if you go across from where these levels are, you can see that these levels are actually represented pretty clearly by the way down where those supports were, and then also all the way up. Each of these levels has a high liquidity pocket right next to it. So if you happen to think that for some reason that the stock market is random, this should open your eyes a little bit. And then notice that this, it's probably the 236, I guess, going up on this move is also the previous supplies, like where the supply dump finally started into the final bottom. So if we were looking at this like shallow S-curve, we would say like that's where I would say the first supply source was. Because this was a big dump. Obviously, this is a huge sell-off. But then like it stopped, right? And there was an attempt to rebound, and then it starts a new trend down. And that attempt to rebound ends up being right where that 236 is. So yeah, so when I look at this, just to kind of repeat what I just did, so if you're wondering how does that play into technical analysis, why would you even think that, and how is that possible? I don't think I'm just getting lucky. I think that when you look at how any range is formed, it's almost always on fibs, because the market, it's sort of a self-fulfilling prophecy, right? Because as you hit these fib levels, people are buying and selling, because a lot of people trade off of them. So it inevitably becomes like these different platforms end up being fibs. Usually you can see it in the VRVP, which is the volume range profile. So if you're looking at a range, which is I think what we are right now, this area from bottom to top here, usually each one of these high points is probably around a fib level, almost always. Again, how could they know if they were already going up in that time? Well, again, fib extensions, and that's using a completely different tool. And I use them a little bit here, the trend-based ones. I'll be honest, I don't use them as much as some people do. And I'm not even sure exactly where you would put it here. Maybe here to here to here. Yeah, and see how this gives you like an estimated fib level. And the top here it said was like 340. But that's actually kind of where we sold from. So had you used that fib level and you saw that rebound and it broke the trend, you could use this fib extension. It's just one of them. But you could have used this one right here. So what I did is I drew the previous trend, bottom to top. You could do it from here. Either one is pretty darn close. It doesn't really make a huge difference since they're pretty similar in height. And then all the way down to the next bottom. And you can see that the rebound gives you a very rough estimate, but it's like 340. Now, why would that be not surprising? What else could you use to find that? You could use kind of common sense, because the previous support was way back here. And that was 360, you know. So like for me, I was drawing this out last week and I thought it probably would come up to 360. It might go a little beyond. It didn't quite make it there. It got to like 354 and then turned around. And that was probably right after the day. Yeah, I think because Monday the 22nd was the last time I streamed. So the next day it went up to 354 and then it started back down again. And that again was I think was common sense based on everything we know. And I'm sure if you were to do it another way, you probably find another reason. Fibs are really easy. You could do this in like a retrace mode where you go from top to bottom. And this is the 618 right at 345. So good technicals are going to be redundant. Like if you're doing technical analysis correctly, I just did 3 different ways to draw the fibs and they all give the same kind of targets. And if you're doing it correctly, you're going to get very similar answers, which makes sense. Likewise, you know, just looking at this as a support level, that's an easy auto reaction to kind of scope out because we went right past it, didn't test it, came really, really deep. and then had a strong auto reaction, which frankly could just be shorts covering. A lot of what we've seen coming down has been, I think, shorts covering and then re-entering. So the difficult thing is like, how do you determine whether it's shorts covering versus a buy-in? And the short answer is that you don't know how to determine that until you get a real breakout, because you can't predict necessarily everything that smart money is going to do. The options chain can't do it. Perfect chart reading can't do it. It's just not possible. You can get close, but until that breakout happens, you don't know. So the reason I'm calling it like a chill stream today is because I don't really have anything new to talk about with AMC, and that's going to bum some people out. Like, I haven't really had time. We had a friend that passed away this week, and we went to a funeral yesterday or Saturday, and it's been a kind of a crazy week for me. So personally, I just haven't had a lot of time to look into a lot of the stuff that I normally would and try to like look at it from a different angle. I think that, when those kinds of things happen in your life and there's tragedies, you kind of just take a break and do the best you can to move forward. But there's definitely a time where it's just harder to operate, to like do stuff that you normally do. And you're just kind of getting by. So yeah, he was young. He was younger than me, and I'm not that old, but yeah, and it was really tragic. So I won't get into the details, but kind of a lot of confusion and anger around it. But anyways, what I am seeing though here, and I know it's kind of, again, a little bit redundant from what we were talking about last week, is the downward pressure still hasn't been broken. So we talked last week about some pretty critical, we could call them creek levels, because they are basically, that's what they are. Creek is just resistance. Like, where is it hitting resistance? If you mapped your EMAs a certain way, you'd probably see that they reflect a creek. You can see this one that I've got on the screen. I think this is the 30-minute 180, yeah. And it's breaking down anytime we get above the 30-minute 180. So when that happens, frequently, you can kind of anticipate it might happen again if you get above it. We're just sort of skirting around it right now. I don't think it's necessarily going to just dump. What happened last time was we skirted around it, and then we started this kind of zigzaggy nonsense till we finally rejected. That's certainly possible going into earnings, especially if shorts are looking for another dilution. So if that's what they're expecting going into earnings, then they may be setting up for a dump. But I happen to think that, again, we're kind of bottoming out. I think this is a ranging motion right here. I don't necessarily think it's wise to kind of count all of your eggs in the basket until it happens. My thing right now is that I totally think we could see some sideways or just up and down chop until earnings. And I don't really feel strongly that it's going to just dump into earnings. I know I said earlier it could. Yeah, it could. There's definitely breakdown levels here, but I think that 276 probably is going to hold. I don't know if it's going to be a singular motion, where we just kind of chop down or go straight down to it. Maybe, this looks like a 50%. It's possible. But I also think that's not usually the way the market runs. So right now, let's take a look. So we've gotten this hook already. We broke down. We couldn't recapture it. So there should be one more right here. So I think we're going to get one more kind of move up, and then we'll probably head down lower. My guess is that if it's going to try to make this drive down into earnings, it'll be like right before or right on earnings. We get some kind of news about something, and it could drive down. That'd be like another dilution announcement or something. That's possible. On the other hand, a lot of times there's an expectation that earnings is going to bring about some big move. And what we find is that typically you make the move that you're going to make before earnings, at least lately, especially the shorts. They've been making these kind of buy up moves, like where they're, buying back their shares right before earnings to see what happens. So if that's the case, we might expect this just to kind of go sideways, and that's kind of what I've got drawn. But I feel like that's probably going to be the most likely thing. Is it going to be really boring again for another week? I would be very surprised if we dumped straight down into earnings. I think what's more likely is you're going to get some kind of choppy action. Like usual, most all of these have been the same. You could use like a fib fan, draw out your bottoms, and you'd see that it's kind of coasting along, crossing creeks, maybe wrapping itself. In this case, recently, it's been wrapping itself around the 180 right here. You can see it's been really coasting on that 180 on the 30-minute. So if you want a good barometer of where it might wrap, I would check out that. And it's right now it's sitting at 316. That is a trading method. I don't talk a lot about like specific trading methodologies, but that's one trading methodology. So if you thought that, hey, I think over the next 8 days, 8 trading days or whatever, or maybe less, it's probably like 5 or 6 trading days, but over the next 5 or 6 trading days, this is going to coast around the 180. Anytime it's below it, you could be buying and then selling as it goes above it. And that would have profited you pretty much every single time had you done it going into the last 2 earnings. Although this was clearly chop, it would have been a way for you to easily identify what we would call supply and demand zones. You know, you can bracket these right around the 180 on the 30-minute going into earnings, and you can see like it's almost a perfect, like a Bollinger Band, right? It's almost like a perfect setup for easy up and down trades. It's rapid fire trading. It's not for everybody. Is it possible that we get kind of a move to the upside before earnings? I don't think so. Like most of the move has already happened because, and this is what I think, because it's already hit the creek. So if you're looking at my screen right now, I believe that this is our creek. We've had moments where we've kind of come above it. We've had other moments where we've kind of tested it and just retreated. But for the most part, I believe this is correct. And I don't think that we're out of the woods yet unless we cross this boundary. So this right now is the uppermost creek I can draw. I'm going to kind of highlight it in yellow or in white. And I think this is it. So when I look at this, I'm talking about how every other time we've come up into earnings, it's been to kind of meet this line. So my thought is that I don't think that we're going to heavily exceed it. Like the highest I could see us going would be some kind of a selling or a buying. Let's just say at UTAD, because I don't know what it's going to be. And it could be a buy-in where it takes off like this, but it's the same kind of concept where if it's an SOS or a UTAD, it's either way, it's exactly where we already drew it beforehand, which is basically right up here around 360. So you would come above normally the local creek, and typically you're going to come above what's called the buying climax, which is the highest point. So right now our range is not quite 360. It's like 354? So you come up to 354. During that move, what would happen is if you make that move, you would definitely exceed the current creek because a UTAD is going to look like a jump over the creek. So right now, if you draw from the top 2, this is just a local creek, okay? It's a real like short term. It places it right in this pocket. So let's say, for example, I'm wrong and it doesn't just go sideways. Instead, it goes up into earnings. How would that look? It'd have to be some kind of a bottoming action here that's pretty quick. And then you would recapture, maybe going this way, and you would probably push up past here and then go up to the top. This is the place where you would then have your possible redistribution, right? Now, the reason this happens this way is because the market is trying to reach out and sort of test the resistance. I don't know. When I was a kid, I used to live around a lot of farmlands and junk. And there's always like that that point where you reach a fence and somebody has to check it and see if it's electrified. Nowadays, they're all like electrified. But back then, they weren't. And so you always have like the one kid He would like grab the electric fence and then have to wait and see if they got shocked. But it's like you're testing the waters to see if there is enough demand for something. And typically, if this is going to happen, this is what it would look like going up to retest it. So if we get a higher test, the highest test will be up here around 350s. There's really no way to buy into this until it crosses high. And so unfortunately, and I'm being, sincere about this, it's not a great trade, in my opinion. The reason is that it's not a great setup is because there's not really much confirmation until you're way up here at 338. If this were a lot steeper, it'd be a lot easier. You remember how there was a really easy to see trade back here before this run up? Because see how steep it was? And like, because of that, when it jumped over and then it found support, this was really easy to identify. Like, oh, it hopped over the creek and it found support and then it pushed. It was really easy, right? And then you could even look at the secondary creek here and you can see like, oh yeah, that's where it kind of jumped over. And that was an easy buy-in. It jumped over the second creek, hit 942, and that was the EMA. And then you had an easy buy-in, easy enough buy-in, took off, little SOS, and then it pushed up to the very top. So right now, what's the difference is that ours is starting to look a lot more like what it did over here during this last one, which means it's kind of more like sideways. Like they really pushed up on that second push, the market did. And so the creek is really high. And I don't think this is a great setup, personally. Now, do I think that it's probable or possible that we come back up and test that creek again? Yes. But in the previous setup, for example, we never jumped it again. Like, does that make sense? We never had like a really big UTAD. In fact, we just kind of listed down series of LSPYs. This was the UTAD. And this is the one I talked about frequently. I was saying these looks very distributive. But you see how wide that is? We never even crossed it. We just kind of came down. So this looks a little bit more like that. And I think as a result, I would be a little more inclined to think that we're probably not going to do this kind of a move unless we're going to sort of take off or unless it's meant to be like a massive fake out. So here's what I'd wait for. If it has another bounce, this is a big if, but if it has another bounce and it comes up to 327, I would wait and see what happens on the next one. If it fails to make a new low and then it creates like a spring-like action on the next jump, so it would look like a jump over this little mini creek, it would come low, and if it creates a little spring-like action and then takes off, there's a second place that you could buy in, and that would be right here. And that's way down the road. We're not even there yet, but I'm just saying this is the only setup that I would think would be decent. Maybe a buy-in around, and again, I'm estimating because I don't know how low it's going to go, but maybe a buy-in around 315. To me, this looks like an SOW, sign of weakness right now. It's not awful, but the reason that I think it looks like a sign of weakness instead of strength is because when we were going up, we created a support back here around $3. And then when we dropped after this little top distribution, we went right through it. It like tested low. Typically, if the stock is strong, you don't see it come back, and this is called preliminary supply. So like when you're going in an uptrend, preliminary supply is where the sellers are trying to like stop the advance, and it may not be like that, I don't know, when you say something like stop the advance, it sounds really adversarial, like they're trying to like stop it, but it's not quite that you know what I mean, black and white, because a lot of times there's people taking profits. They're not necessarily trying to stop the advance. They think they may go further, but it's still nonetheless a supply effort to stop an advance. That's preliminary supply. So that's the two pushes that you see here, and you can see where they push down to. And that's why I was saying that very first preliminary supply right here, that's to a fib level, the 618. And that's why I think it's likely that 272 or whatever it is back here will end up being really important. And it's very possible, in my opinion, that that's where we're going to be heading way back down here. This is a 618 retrace. So what am I saying about this particular range? Well, this preliminary supply, this little one right here, these are all the same, okay? This little stop to sort of see what happens with the buy-in did result in a stop at $3. So it sold, it got all the way up to 320, sells off really hard, catches at $3. Makes sense, it's an even number. But then notice that after these two tops, there's a really hard sell-off, and then it bleeds right back down through and it breaks $3. So $3 is not a strong wall if it's easily passed through. Is it a round number? Yeah. Is it likely going to play an important role in the next couple of weeks? Yeah. I mean, we're not saying that it's not important. That's silly. I'm saying that this, as a result, looks like a sign of weakness. So buyers who are strong would be stepping in and saying, no, we don't want it to go below 3. We don't think it's worth that. Does that make sense? And if sellers were selling, there'd be enough buy orders here that they would outweigh the sell orders. What this tells you is that this had enough selling to outweigh the buy orders, and that were put at $3. So it's kind of common sense. I'm not trying to rewrite the book here. I'm just telling you this seems to me to be common sense as a sign of weakness. So unfortunately, I don't think it necessarily means that you can't go up again. And this is where a lot of people get confused about stuff like Wyckoff, because they're like, wait a minute, you're saying it's a sign of weakness, but then you're saying it could go back up. Well, yeah, because there's such a thing as a UTAD. And all a UTAD does is it comes back up and it's an upthrust after a distribution effort. And it just goes back up and tests whatever level. So that could be at 350, that could be at 354. Those are the two levels that we met. And so it would be somewhere around here. And a UTAD is an effort to sort of shake. Honestly, it's weird. It's actually a way to shake out shorts so they can get more of the short shares available. The short sellers will try to shake out bulls, but they'll also try to shake out other shorts. Just like a buyer tries to shake out other buyers because they want all the shares. It's a similar concept. But that's the UTAD, is like there's a final gasp and it kind of gets this false rally, and then they buy back in and they get a really good deal on this and they can drive the price down. Is that possible? Yeah. If we're fortunate enough to not see that happen, what we might just be experiencing is that this is not where we're going to find support. If that's the case, we could end up with a much longer, like let's say for instance, we drop this level and all this stuff that Booksy just drew, it doesn't really matter. I think it matters because this is where the moving average is. And in the last two sideways actions before earnings, we've kind of hovered around the moving average. Okay? The 30-minute, 180, it's been really close. So I do think that it's possible that we do that. And that's kind of the scenario I just played out for you. Now you might be saying, hey man, I don't get it though. Why would we have to do a UTAD? Why can't we just take off? It's not impossible that this is not a sign of weakness, but we'd have to see a spring action and then we'd have to see continuation at the top. And unfortunately, I could be really great at reading Wyckoff and still get it wrong because it has a lot to do with volume. The volume profile on this bottom is kind of interesting to me. One thing that's missing, I think, is the buy-in is pretty darn strong, but it's definitely still a little weaker than the sell-off here. And the other thing that's kind of missing is, again, that support level. So I'm just kind of waiting. You have to see where the support is. And like I said, I think they punch through 3. That buy-in looks pretty weak to me. Doesn't really look like a defense. And it's weak, way weaker than the sell-off. So the response is not great, I guess is what I'm trying to say. We'll have to see. So maybe 3 stays, maybe not. Hard to say, you know. Some of you are probably thinking that we talked about last time. Some of you are probably thinking that the setup here could be that rising accumulation. It's not impossible. It's difficult to do any kind of analysis like that without seeing the result, because at the end of the day, if this is a rising accumulation, there's a decent buy-in. It's not like anything I would write home about. You're getting a decent RSI reset right now, at least on 30 minutes. You know, that might not mean a whole lot, but it's there. But you have to have support. And so once you find support, it's really no different than what I've already drawn. So if you're wondering like, well, what's the difference between the two? It's really just volume. And it's how far down the sellers can push it. If buyers can maintain support, I think it's possible, even if this is a sign of weakness, it's just a sign of weakness for like that lower area, or excuse me, that upper area at 3. So what do I mean by that? Well, what I mean is very simple. Like you could still have a range here that's just much larger. Does that make sense? All right, so let's say, for example, this has a push up and then it decides, no, you know, we're gonna dump back through, and this time it doesn't regain its footing, right? We don't regain our footing like I did in the first example and head up. Instead, we do a pretty straightforward M cross. So we're gonna get a rebound. We test that 180, it fails. Now we formed a new creek. And then we get some kind of a fake out move. It looks like it jumps the creek, but then when it comes back down, it really just kind of slides through. Where could it be going? Well, then you have your other support levels. We already talked about that. And I think that's why I'm not confident that a early sign of weakness is enough to say like it's got to dump all the way. Because you could come back down and fill like a gap or something, whatever this is. There's probably a little liquidity gap right here, just above this area at 274, probably right up to about 280. I don't know, it was traded a little bit. It was kind of a light volume right there. So I think that, yeah, this could end up being a floor for us too. So it is possible that we don't really meet the floor till about earnings, and then we'd have to wait and see. This could be just a really long-winded sideways downward motion. Super boring. That's what happened last time. It really wasn't very exciting, you know? Like we did get a little rush into the end, but most of it, if you look at these first two push-ups, most of it was just kind of coasting down and then gently back up. And we ended up sitting around that for weeks until they did the dilution announcement. That bothered me a lot because there was just no buyers. Like there was no one was stepping in to take it and run with it, even though there was no dilution announcement. And that was just a really bad, I want to say omen, but it was just a bad sign from a charting perspective when you're looking at volume as an indicator, because volume is a very key indicator. So it was kind of a bad sign. We were just kind of losing all volume and nothing was happening and no one's buying it, you know. It's not a good thing. I'm not saying nobody at all is buying. Some of you are going to be like, but the 13F filings. I know there's institutional buying, but it's not stopping any kind of a downward motion by shorts. And that's evident in the price action over the last few months, you know, especially since the beginning of the year. But it's been downtrending for years and it's still downtrending. So we really don't have a confirmed buy-in point. I think the volume being heavier down here matters. And I'll probably just say that, like, at this point, it'd be wise to consider the market on the whole as a very important indicator for AMC. I've talked a lot about charge point as a kind of a model of AMC. I know people don't necessarily like the stock like I like it, because I like it for a lot of different reasons. And it's yet to prove why you should like it, because it keeps going down. So it's kind of like you're fighting against a storm, right? And sometimes that can be super, super beneficial if you make good buy-ins, and sometimes it's just a destructive, bad thing. And I know you're thinking, like, I didn't come here to listen to you talk about some other stock or whatever. You said IWM and AMC. Yeah. But here's the thing. ChargePoint has a chart that looks very, very similar to AMC. Very similar. Going back to January, a big January run up. It's got the same cat ear. It's got the same March run in 2022. The difference between ChargePoint and AMC is, if you look at the levels, they obviously don't match, but they're the sell-off happened in like a way that it's already broken down to like through its previous all-time lows, and it's been like that for a while. And AMC took a lot longer. It wasn't until that reverse split. You put this next to an AMC chart, and it's kind of freaky how similar those movements are. So what I think is that when you look at smaller cap stocks, a lot of them are probably in this same basket where people are unsure that they're going to be successful and they're waiting for news and all this other jazz. So I've been deferring to IWM, which is the Russell 2000. For those that don't know, there's a Russell 1000, 2000, 3000. It's just the number of collected stocks in that ETF. So when you look at iShares Russell 2000 ETF, which is what this is called, that's your IWM stock. And that's the one that, in my opinion, is a pretty decent indicator of small cap health. And what I was waiting for is this pullback. It happened. It's kind of an obvious one with the rising wedge action, the clear RSI imbalance, like the stock price was rising to new highs, RSI was really low. I knew there'd be a pullback. I didn't know exactly how far. I did the 50% method here. And when you look at that in combination with these channels, I know it's hard to see, my chart's kind of a mess, but when you look at it in combination with the channels that I've got in the white, it gave me a pretty decent crosshairs target of like 194. Now I was a little off. It ended up coming down to like 191, which is where that support was. That's an old support. If you go way, 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 way back, the last time that acted as serious support, you could argue was here in January of 2022. But previous to that, the last time that was really support was way back here in December of 2020, which was after the big COVID drop in March and that big recovery. When you go further, you'll see that there's not really any indication that this should be a support. It was picked out, again, it's probably like a fib extension level or something. It's close to 200, but it's kind of an odd number, right? It's kind of slightly not 200. 191. So strange, but it is a previous support way back here. We've pushed above it a few times over the last year or so on IWM. We didn't really check it. We kind of checked it out once here. So this is going to act as a kind of double bottom if it can hold. Okay, so at this point, you might be saying, all right, cool, Booksy. So you've gotten a pretty good grasp on how this might move down to this point. What about in the future? Because we don't really care what you've already talked about. It's happened in this case. What about the future? Well, it's pretty straightforward. I mean, I'm looking at it right here. I just drew a line. I didn't even think very much about it. Just kind of dropped it here. This should be your trend. You can see it's jumped the trend and it's jumped back above. I'm on the 4 hour, so this should be the 180 on the 4 hour. That's a big deal. So it's back above the 180. If it's going to distribute, this is probably where it would happen. This is a previous support at 200. You can see the way I marked this out last week was that it needed to come back up. My thought was it was probably going to wrap somewhere around this green line and this red line. I was anticipating probably 201 around May 3rd. We're getting pretty close to that. The reason it would do that is because if it's dancing around this long-term trend, which is red, the red one, it kind of grabbed back onto it, and it's from a ways back. You can see it started on the very, very low that we made in October of 2022. That low, it's been skirting around that for the last year or so. And, well, yeah, a year and a half, I guess, whatever it is. And we're back to it. We're skirting around it again. So I think that if we can find support above it, that's about 50% up from the bottom here. I think you're going to end up with another 50% move. And you're going to head back up, I believe, to about 216. I think there'll be a really big move to the upside. The benefit of 216 is kind of obvious because if you came up to that point, you're now back in levels that you're testing from way back here. I don't have any markers drawn, but if I did one, it'd probably be sensible. Right, so this is like the previous, I want to say it's the support, but you can see here that this is definitely the area where we found a lot of buyers. Anytime it dropped beneath 216, or yeah, back in the several months before the big drop occurred, which was like in November of 2021, something like that. Yeah. After the all-time high. So does that make sense? So is this a logical level to come back up and test? Yeah, it makes sense as a level to test. Is it a critical support level? I believe it is. I think that 205 and then roughly around, what is this one right here? 208 might be more important in the long run. But I think we're going to go up there. And I think 208, that's why I drew this back to like 208 right here. I think 208 is kind of where you come back and you find actual support. This is like the test of that liquidity because this was like a bottom padding. Remember, you're going up just to check it. And then if you're going to find support, it'd be at 208. Just so happens that if you draw a marker from the all-time high down through the previous high that we just had around here at like 211 or whatever it was, that would get you above that and then get you right back down to check it. This is an S-curve. The finishing of the S-curve is not as tall as I'd like it to be. It's an estimation on my part, so you'd have to take it with a grain of salt. But I believe the S-curve goes from 161 all the way up to 230, 227. If it were to continue, and I know that's what most people that are buying in, if you're bullish, if it were to continue, I think it's got a strong chance of hitting a couple other really key markers. I'm not a big fan of like making call-outs that are like moonshot call-outs, but I do think that the simplest one is way up here. It's just so soon. Basically, it'd be around August. It'd be about the time that we would be, in election season, that you could see it possibly. It's a really big long shot in my opinion, but you could see it possibly run up as high as 320s. And I know that's sounds ridiculous, but it's because you're like, well, wait a minute, we're only at 200. That's a huge increase. Yes, but you have to remember that SPY has already like exceeded its all-time high. It's been running. The small caps have not. They've been going sideways, and they technically they accumulated longer because they went sideways for a considerably longer amount of time. I don't think it's that black and white, but I think that that's a big part of it. I think I think 230 is like the easy target for like PNF. But if you go way back and you look at the all-time trend, the next time if we were to find support here and break out and continue, the next range would take you all the way up to 320, and that's where you'd hit that that next pocket. So I really do think that that's not, it sounds crazy, but it's actually kind of the next natural high for the market, for the small cap market, if we were to this year find that advance. Okay, if for some reason we get up to like 230, for example, and we end up ranging again, which would be odd, but if we did end up ranging again in the same range that we already were, my guess is at that point you're looking at some kind of a really long-term cup and handle type deal where you're basically hitting a resistance that you've already hit after a really long period of buy-in. That's what a cup and handle is this is one of the most misused trading patterns. Cup and handles are almost always several months long. They're very rarely like weeks or days long. But the principle of it can be applied to a short-term chart, and that is simply that you are, you're buying into a particular point. You find resistance, at that point, and then as you go down, sellers are strong, and then as you come back up, buyers are strong, so it's found a support. And then the handle is kind of like the final buy-in. Usually it's like, okay, we've hit the resistance again, we're checking it here, and now we're seeing like smart money buy-in or whatever. The big rule about it that typically works pretty well is you don't want to drop beneath 50% retracement before going back up. So it's a decent pattern to trade, because if you see the whole thing, let's say this is a gigantic cup, if you see the whole thing, you know where that level is. So I believe that level I just called out, that 226 area, might be that wall. So we kind of know where that wall is. So let's say you hit that wall, and instead of just breaking it, you reject and you start meandering down. You know, this could be where we end up going all the way back down, you know, to 200 or something come November instead of breaking out. Well, that might seem really bad if you have like calls or something that could seem really destructive, but you would watch the trend. If it broke that uptrend, you should be out. You shouldn't be like playing it. The good news is that this has now created what's called a handle, or some people call it like something else. I don't even know. Forget. I don't know the different terminology people have for it, but I think it's a simple enough idea. It's just it typically forms a downtrend. The longer the downtrend, the more skeptical you should be of the pattern, but because it has a higher chance of not working out. But if it does work out and the handle's really long, it's usually a super explosive move because it means that there's been a huge amount of buy-in and it's held support. So it's kind of a catch-22 because statistically speaking, the long handles can be seen as a little bit of a pattern weakness, but if they hold, so for whatever reason this did some super long handle for like a year or something, that would be a ridiculously big breakout. And it's just a simple matter of watching the breakout and then watching it break back above. So you could do a small trade on the local to see if it goes all the way back up to the top. And then once it breaks the top, you'd have a big push. What's the target for that? Well, it's an easy target because you just take the measurement of the bowl to the support. I didn't draw a straight line. And then you measure that up. It's pretty straightforward. So you can do it as a percentage measurement if you want to try that. I would do it as both percentage and number. So because percentage can often like really bloat the target. It can make you think the target's really, really high. And sometimes it's right. Don't get me wrong. When you do a lot of these measurements on ancient cup and handle patterns, you look back at the previous ones. They might have that kind of a huge move. But it's also good just to consider the dollar value. So this is a $64 move. It's a pretty big move, right? And that's 28%. So you can look at that and you can say, all right, well, $64, 28% move takes you up to 292. And that's a pretty big move. How long does that take? That's where things get kind of tricky, you know. And I would just say, like, in my experience, this is where you can use some of that mathematical stuff with sine waves, where you do like a 50%, and you could try to like determine it based on that. And that tends to work pretty well. I was mentioning that for AMC earlier. It's a pretty good way to determine where we might go. And I didn't do it, but let's try to do it real quick. So we're going to loosely do a 50%. You can see that right around 50, we hit our first major supply point here. 1, 2, 3. Yeah, I bet we're right too. I've seen this before. So it goes right through here at 290. And this is where the stuff gets a little tricky because I hate the word eyeballing, but that's kind of what I'm doing. It's like eyeballing it. So this is actually really low. It seems like that might be it right there. It's hard to tell. I can't tell if I'm measuring too closely or what. Here, let's make it full screen. I'm going to zoom in and try to frame this better. So this doesn't always work, but it's a pretty, I'll just say this. It's simple enough and it's consistent enough that I give it thought quite a bit. It works really well for some reason on RSI, for example, on like AMC. When you see like an RSI cross, you're looking at that waveform. But then again, it's kind of like, in this case, it's basically the same as the downtrend. So maybe that's why, because RSI kind of flattens everything. We could go back and look and see if it worked out the last couple times. I don't think it did though. So it's kind of, maybe I'm just kind of tooting a horn that doesn't need to be tooted. It's hard to tell. It's also hard to know where to draw that from. This is how you consider the sine wave. Like, is this part of the wave right here? So is this the peak? Those are questions you have to answer. Or is this the peak, the previous one? I don't know. Could do both. Really doesn't make a huge difference. So I'm going to try it going backward in retrospect. Yeah, and so in retrospect, this crossed 50% here. It's pretty clean. It looks a lot like the moving average, which doesn't really surprise me. Those averages are based on like price movement, so naturally, if that's the 50%, you'd be wrapping around that price movement. So I'm going to do my best. I'm looking back here to make sure I'm not going way off. But yeah, this did a pretty good job of pointing to where you were going. So just to repeat, I took a measurement from here to here. All right, that's the direction of the line. I'm sorry, that's the trajectory. But the measurement was actually this bottom to this top. And then this is like the 50%. And then if you look forward, you can see that's where it ended up going fairly concisely. So that being said, this is pretty steep. And it does look like kind of a double or maybe even triple intersection down here around 218. That would imply that, yeah, you'd come back down real low sometime. This might be where Stockfather's number pops up. Yep, this 190. That's the same number that we had as an ultimate bottom anyways. So whoop-de-frickin-do, right? Way to go. Yay, we got another target that's the same. So it really, I mean, I hate this because I feel like what's going on is they're using these old numbers as targets. Because like, remember 192 was the previous low, all-time low. And it seems to me that if you're going to meet it at earnings, that's where you'd go. So if this wave continues and we cannot catch and make new highs or whatever, I think it does look like it's trying to get down as low as 192. But that was already kind of what we had on our chart. Nothing really new there. So is the long-term squeeze still a thing? Because I've been out of the game for a long time, I'd like to know where your head is at with the big squeeze. Look, I think that, and I know you guys are talking about something else, but I think that there's the idea of a MOAS, which is mother of all short squeezes. Did it already happen? Yeah, in some ways it kind of did. I mean, people look back at that time and they think that that wasn't enough. But if you look at historic short squeezes, there's not that many that just continue to go and go and go and go and go forever. Most short squeezes happen and they are, I wouldn't say controlled, but they do have a top. I mean, they all do eventually. And the ones that people are thinking about are these ones that kind of came out of nowhere. Like they had like a perfect storm of events happen. And then there was this massive buy-in and shorts had to exit. People were not selling their shares, so it made it hard to cover short positions, and that causes the price to inflate rapidly. So on and so forth. You've all heard that narrative before. It's a technical setup, and it requires a certain kind of buy and hold mentality to make it happen. But most short squeezes are not super planned out, at least in regards to the ones that people are thinking about. So something like the mother of all short squeezes, that's something that came about because of, ultimately it came down to one guy who was looking at the chart saying, look, I think that there's a pretty huge disconnect between what's going on with GameStop as a company and what the market's saying is happening in GameStop as a company. The market still argues that GameStop should and will go bankrupt. I mean, if you hear like market pundits, they don't think GameStop's long-term very viable. Okay, we could argue about their lack of extreme debt. We could argue about their overhead. We could argue about so many things. They've had some things that they've introduced that are good, some things are bad, blah, 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 blah. That's a fundamental argument. The argument at the time was that it was undervalued, but also that it was so heavily shorted, like it was over shorted. So the question is like, well, how do you instigate some kind of a squeeze like that? What happened with GameStop, I'm convinced that a lot of it had to do with people that were on Reddit, but also have a lot to do with what happened in the buy-ins, because as you all know, going into it, you had people like Elon Musk or whatever buying GameStop. And there's some things that are like that are catalysts that are really hard to predict and control. And whether or not you believe that it was 100% Reddit users or not, it's not possible. I mean, it's not possible that that's the answer. Like, you can believe that, but if you look at the numbers, like, there was a lot of institutional buying as well. There are people who think that it's all about retail versus big money, dumb money versus smart money. It's not quite right. It's really dumb money and smart money versus smart money, because there's always a benefactor, if that makes sense. There's always a benefactor to a move like that. Why am I talking about this like past tense? Because I believe BlackRock, if you look at their history with AMC, and if you look at other companies like that were kind of rooting for AMC, they were invested and they made a lot of money. And it wasn't just a bunch of hedge funds that all got screwed. There were a lot of hedge funds that made a lot of money. There were a lot of investment places that made a lot of money on AMC. And what they did is they sold you and I their shares when it hit the top. And so is it possible that there's a bunch of shorts that are quote unquote trapped? I personally think no. And the reason for that is, percentage wise, trading this stock would have already given you your money back. I don't think that it's very likely that there's anybody quote unquote, and I'm putting out air quotes, trapped in AMC. The idea of it being trapped is that you can't exit your position. But we already know that if you had shorted again from the top, your investment would have already come beyond what it took longer, but it still went farther than the bullish side. I mean, it's that simple, you know? If you were a bull and you invested right before the January run-up, you made a lot of money, right? 900% or whatever the heck the number was. But if you were a bear and you invested at the top, you've made more than that. You've exceeded that amount. And the only real argument that you can throw out there is that, yeah, but they have to pay interest because they're borrowing shares. So they're losing money as it's going back down. Okay, but then you also have to consider the fact that AMC was the top moneymaker for lending out shares last year. It made people more money lending out shares last year than any other stock in the market. And that's a huge deal. So not only are they making money on shorting it and playing that downside, but they're also making money on lending out shares to short it. So do I think there's people that are trapped? I'm going to answer no. It's my opinion, though. Do I think that it's possible, though, that we have another short squeeze? Yes, I do. And not only do I think it's possible, but I think it's probable. Do I think it's inevitable? No. Do I think it's probable? Yes. There are ways to alleviate the pressure that could cause a massive short squeeze. One way is to get people on board with selling. Do I think that retail has sold? Yes. Do I think that a lot of people have sold over the last 2 years? Yes. And I think that the idea that this is all short selling driving the price makes very little sense to me. Short selling is a lot less. It's a harder way. Let me say it this way. It's a harder way to drive the price down. Mathematically, it's more difficult to short a stock down than it is to just cause a sell-off and like have that drive the sell-off, because it just is, and it's not as economical either to just short it all the way down. So I think a lot of the pressure that we have seen is very large institutions that are shorting it. I think they're buying back their shares and then starting a new short position, and they're just recycling it over and over and over again. And I think it's pretty ignorant of anyone to say that smart money is not capable of doing that. It's just kind of silly. And this is a 51% move to the downside right here. And we've had how many of these over the last couple of years? It's just numbers, guys. I'm not trying to make anyone feel sad or angry or whatever, or try to take the side of smart money. I'm not doing that. I'm just saying, look at the numbers. If you exited a short position down here after this massive drop, you would have made bank, you know? An upthrust like the one that we had up here would have been an ideal opportunity to start re-entering a short position, you know, to sell if you were thinking this was going to go up and then you decided, no, I changed my mind. I think it's going to go down because this is going to happen. I mean, this is an 83% move here. I mean, I just think it's silly to look at a chart like this and say that somehow shorts are still losing, whereas they've got billions of dollars to play with. Maybe not billions, but some of them do. Some of them have trillions, right? Do I think they care that much about AMC? Do I think that they're underwater? Well, no. Because let me tell you, if a short was underwater at $70 and they did not go out of business, they've been able to figure out a way to survive this whole time. Obviously, it couldn't have hurt them that much. Now, the argument, hey, it doesn't cost me anything to hold. It costs them money to hold. Yes, that is true. It doesn't cost you any money to hold. You're losing on opportunity cost, absolutely. You know, you have X amount of money tied up in AMC for 2 years. You can't use that money somewhere else. That's opportunity cost. Those opportunities are being lost. But a short has to pay interest on what they're holding because they're borrowing shares. So yeah, does it cost them to short? Yeah. It's not as economical as just selling. All right. So in conclusion, is a MOAS possible? I think it's very probable. I think it's possible, and it's very probable that we're going to get a big short squeeze over the next couple of years. Do I think that it's going to rocket nonstop to the moon? No, I do not. I think that this is a very controlled move. They've been able to walk it all the way down. I do think that you could make a technical case for a massive moonshot. I really do. But I've already tried to like be as realistic as possible with this, and I've talked about it quite a bit. The most common setup that we can look at is the one that I've been talking about for, I don't know, since I guess the beginning of the year, but it's been around for a long time. And that setup does not have us getting that moonshot. It just kind of doesn't. It's a setup that may seem a little bit too weak for some people, like they think it's not enough. I personally think it's too strong. And that's this setup right here, which is going all the way up to like $80 again. Like, yeah, that's really close to previous all-time high, Booksy. You just think they're going to recycle 192 to 70 something again? Well, maybe. You know, it is, you know, 2,000% or whatever. I mean, it's a huge move. And this concept that like it's just going to keep going and keep going and keep going would only and has to depend on what happens with retail, what happens with institutional buyers and sellers. I don't personally think that institutional buyers and sellers are looking for a short squeeze like that. I think that's mostly retail. And I think so many retail have been burned by this play and by the market over the last 3 years that they're probably going to try to sell off. And that might be part of the reason why we haven't seen it yet, is there's still too many people willing to sell in the play, and they're not going to be able to take it up until all of those weak hands are out. But we just talked about it, like if you push up and then you have a distributive action and then you drop all the way back down and you break the lows, that really tells you that there's nobody there to buy. And I suppose the argument could be that, well, we don't really know that because this was a reverse split. So maybe we have to go to 192 because we have to go back down to the previous bottom to check that level. Maybe. I think that this part right here is where when you talk about manipulation, this is it right here. I mean, this is the manipulation moment where whatever was gonna happen didn't happen. But everything after that, still, it looks very controlled. Like, it looks like everything else we've seen on AMC. There's really nothing about this that's out of control. I'm sorry. I've been looking at this chart now for 3 years. This pattern appears all over the place. So is this a pattern that is only repeating because it happened here, or did it happen before? I don't know, man. It's chicken and the egg. All I know is that this is a controlled walk down. We have not seen the end of shorts. We have not seen the end of selling. I think this is possibly a bottoming action that could result in a massive move to the upside, but I don't necessarily think that it's going to be one-off either. And I've talked about how there's a decent chance that you could get a pretty massive move here that happens over a long period of time. And based on the waveform, that seems most likely. Based on previous run-ups, maybe some of you are thinking like, well, dude, if we hit 192 and take off, why wouldn't it just take like 150 days or something? Yeah, I mean, it's possible, And I've got this drawn out in a particular way, but 150 is like right here. And I mean, that's kind of roughly where my 42 target is. I have a little bit, actually I have a little bit faster than that. And that would be a pretty big deal as well. My thing is that it's a different setup now. Like, so you have different creeks that you cross, you'd have different things you'd have to kind of consider. And yeah, it's very difficult to know exactly how that setup would play out because it's not necessarily going to be a rinse and repeat. We've looked at GME quite a bit too on this channel here and there, and I said a long time ago, and I don't think it benefits much us now, but I said a long time ago, I thought GME looked pretty distributive, and it didn't look like it was super, super healthy to me, like the way it was going. But all that being said, it has been going down, but it's also on a massive wedge. So if you look at GME, because you're probably thinking what I'm thinking, which is, well, maybe all these guys run together. You're talking about charge point because it looks like the exact same chart almost since the big run up. What about GME? Well, GME is in a similar situation because it has that long-term sell-off. It's just one LSPY after the next. Like we drop, we come up, we buy up, we drop, we buy up, we drop, we buy up, we drop, we buy up, we drop. They're getting really, really, really narrow, right, as we go. Yeah, that wasn't too far off. That was pretty close. Didn't come down, but this is the target I got. Apparently, last time I looked at this chart, I had a target of $10, which made sense to me because this is where that first touch was. We talked about LSPYs and stuff. This is like a 50% right here. So you can see the curve. If you look at this move, this first move, this is roughly like your halfway point. I should just measure it. Right there. See that? So it makes sense to me that that's kind of where we come back to. It's a huge retracement. It's pretty straightforward. And there's a lot of ways you can kind of come to that conclusion. You're on your own. It's already kind of lost, in my opinion, GME has already kind of lost a lot of trends that it possibly had. Like and I mean that as kind of succinctly as possible. There was a lot of trends that it had that just don't really matter anymore, and I don't really know what to do with that except to say that, well, they don't matter. You know, when we look at GameStop, there's really only one trend that matters. It's this one at this point. So everything else feels kind of pointless. Like you can grab other trends from way over here, but none of them matter anymore, you know? And this is the one that I think the patterning was lost. It's right here. It's the same time, November of 2022 is about when we had that. If I can find the chart again. It's kind of the end of the cat ear, second cat ear. This is in August. I see November of 2022. That was August of 2022 is when we had our 8-bit. This is November. This is when the cat ear first started for AMC. So the second one anyways. It's a concept that I'm not going to be able to just explain in like 2 seconds, but it makes sense to me why that might be the same marker. And that's like right there. So one thing you might say is maybe that was like a 50% point. But that doesn't really bode well for GameStop. Makes it sound like this isn't going to move till February of 2025. That sounds kind of familiar to me. It sounds a lot like AMC's long-term trend. That's just a sine wave kind of measurement. So that's like saying there's a yin and yang kind of motion here. And that it's probable that this takes that long. Might seem ridiculous to some people. But you have to remember, like, smart money doesn't really care that much whether you think it takes a long time or not. And if this is indeed a gigantic wedge or a giant buy-in, an SOS kind of motion, then that could yield some kind of a massive move, because at that point you're talking about a possible move way up, you know, way up here probably to like 500 or 600. It seems a little crazy to me, but that's kind of where it is. So I don't know. There's a lot of other things we could try to do. I think the other one for this is is a bit trickier. GameStop's an older chart than AMC, but we could try that. Yeah, it's right here, April 20th. Let's see. I'm gonna just kind of again eyeball it. Actually, that looks like the downtrend. So you see how it crosses. This is why it crosses my mind so much, because this created like a downtrend, and then it went away from that downtrend like a drawstring, pulling it back, and then it whips way back up, and it resumes a previous uptrend target. And yeah, that's your wave right here. So that's why I think the next wave, let me go to the weekly, is kind of like the common sense wave. If it's going to continue, it should be somewhat sensible. Wave 1. Yeah, it looks right to me. Let's check it out. Let's take a look. I'm using the first support point, but there's others. So, I mean, you can make that argument that maybe it comes back down 50%, but let's see what this one is. This goes all the way to like 550. That really would be the creek check and the waveform fully checked. Like, see the breakdown all the way to the bottom, all the way to the top, all the way to the bottom of a massive channel. It'd be like 524. I wonder if that's a fib level too. That's the previous bottom from like way back here. That's called a backup. So if you have like an SOS and it backs all the way up to the creek, that's probably where it goes. Yeah, it seems possible. This kind of headed that same way. I know y'all are thinking like, it can't do that. It's a giant wedge. Well, I mean, it does look like it's pointing that way. That wedge could extend all the way down there. So this is December of 2025, 2026. It's a long time. Long time. You know, and I could be slightly off with my lines and it would make a big difference. So you take it with a grain of salt. I'm not really snapping a bunch of stuff and measuring a bunch of crazy stuff. Let's do a fib level. Just kind of eyeballing it. Yeah, all right. So 460 is, we were right. 866 is the 50%. So I think you probably have some kind of reaction there. And it looks like 460. So I'm a little high. But 460 is that. Yeah, that 618 level. So that's the support from way back. Way back here. That's 2006. This is like the 2008 stuff. Found support again. It made a spring action. So it had a support 2011, and then there was a spring action, rode back to the top, redistributed, and then crashed real low. And then get the big move. Yeah, I mean, look, all I'm saying is if I looked at this and I didn't know that this was like a yearly long chart, I would probably say that this is going to come back down here. I would just be like, yeah, it's either going to bounce at 860 something or it's going to go all the way to 468. So, but I mean, that's the thing is like, well, then what? Well, it just depends. You know, I think that a years long breakout like that could yield a pretty massive move. And I'd have to go and look at Bulkowski, but I think that his measurement tool is, man, I want to say it's like, usually it's like 40% or something. There's always like a double estimation, but you would measure this and you'd say, all right, that's $100. And you do like some percentage meeting of that. And it'd be like, so instead of it being the flagpole where you measure the whole flagpole, you look at it as just the length of this times whatever. So if that were to break out, it'd be like a $40 move or something, which may seem really low to a lot of people, but it would take you back up to at least 100. And that's just the confirmed move or a likely confirmed move. That's the target. You know what's funny is like that's the same target though. That we talk about this a lot between the two charts, but that's the same target that I've been talking about for like years on AMC. It's that March target. It's that top. That's the measurement right there. It's a $40 move from that point up, and that works out. I don't know if that's exactly it with Bulkowski. I'd have to look it up, but that's the same marker. And what's bizarre to me because for AMC that marker represents, and it does here I guess as well, but it's a little different. Like for both stocks, AMC and GME, that target represents the March top, but it's also kind of like the place where we really first broke down and then had that retest of a supply level. So in GME, you can see that it's really clean. It like comes right back up, hits it, rejects, you know, and that ends up being the place that you would call like your ultimate supply, right? But before that, there was no reason to come up here. It was kind of like, this is just where it happened to kind of consolidate. And so we're going back up and we're checking that trend and then we're rejecting. But for AMC, it's a little different because for AMC, that's like the original supply level for the stock. So it's strange how they can both have the same target, but they mean very different things depending on how you look at it. You go back in time, and I've got these levels on my chart already. Like it's like 196 now. It's kind of crazy. But if you go back, that's where this all kind of starts for AMC. So I don't know. Maybe there's a way I can find that target on AMC. I haven't found it yet, other than that, just to say, oh, that's the supply level. I think we'll hit it. But that's a pretty decent target for GME. So, I mean, if it came all the way down to 4, yeah, that'd be miserable, but then it could run up to 50. That's a pretty big move. It's not as big as the first move, but it's a big move. And again, that's just sort of like a step 1. And then you'd have to see what happens. I don't know. I don't know what that would be for AMC. I think it's, at this point, like a 786 retrace. We could see what that is. Maybe. Someone asked me about charge point. Is the bottom in? I'll have to double check, but I think that charge point is at its bottom, and there's a reason why I think that. I wasn't sure it was going to go there, but I had it marked off my chart for a while, and we can go take a look. There was a pretty clear low target, and it just hit it. I don't have another one, so I think it's just my last target. Yeah, so like if this happened to be the bottom right around here, or even at like 190, let's say. Let's pretend like worst case, okay, it goes down to like 192 again. This retrace, the 786 to the 618 is that same pocket. So it may be hard to see on my messy chart, but it's right here. That's where the 786 and the... No, I'm sorry. I said 618. I meant 786 and 854 retrace. So it is a fib level, assuming that's the bottom. That's a big move. That would be crazy. But Booksy, you said $80. Yeah, I did. There are different ways of kind of coming to find a price target, right? And it just depends on what you think is more likely. So I would say that's kind of like max squeeze zone right there. I don't know. That's kind of reaching, but 184 at this point would be an 8,000% move, which is insane. That's insane. That's a huge move. That's really big. You know? I don't know. That's a lot. That seems a bit crazy to me. But I don't know. I guess it's not impossible. I just don't know where else you could get that from. Like, where did that target come from, you know? I'm not sure. Maybe, because remember what we did on GME is we used that marker around November. Maybe if we use the same marker here, and that's a midpoint, not over here where we dropped because of the reverse split. It actually makes some sense because this is the halfway point on the macro second ear right here. That would be pretty wild, but it wouldn't be completely out of the question, as it is like the halfway point of that cat ear. I'm going to add this to the chart real quick. It's a question I have. I can't give you the answer. I don't know the answer. I'm going to call it cross target because I don't have a word for it. I just have to check. I don't know. I feel like I've asked this question more than once. That's a good question to ask though, because there's a pretty significant difference. I mean, you can tell, but there's a significant difference between thinking that that's the answer and then thinking that this is the answer. It could be a really significantly different move. I mean, it was the difference between like 80 versus 180. It doesn't look like that on the chart, but that's a huge gap. I mean, it's a great distance because it's mostly percentage based. So that would be something else, huh? That would be something else. The thing is like, if that were the case, where would that be on charge point? Let me think. Honestly, I think it's flat on charge point because this is like back in April 2020. Let's see. This stock was created in like right around COVID's birth. So it does have a March drop, but the March drop is so small. You almost can't see it. This is a very weird looking COVID drop, isn't it? It's like super tiny. I don't think I've seen anything quite like that. Okay, well let's just go with this. I'm kind of interested now. So this idea that like November, the November bottom, October-November bottom of 2022 could be a wave crossing, like a wave midpoint. So let me find that pocket here. I'm pretty interested now. Convince myself it might be important. November of 2022. So that's around October, September, October, November, December. Well, that's interesting because that's in the middle of a downtrend. Is that like the 50% mark too? It is. Check this out. So if you look at the 50% mark, it's like right here. It's right in the middle of November, right there, November 9th. That's an election. That's the election day, right? November 8th, 9th. That's like the 50% mark. Spooky, huh? So let's put that in our crosshairs here. Are we measuring from March? I think GameStop's chart was different. I think I still have it pulled up. There it is. Was I measuring it from March? Did I think that was it? Look at it. It's the same S-curve. Now you might think that's super, super important. I don't really think it matters that much. Yeah, it's March of 2020. Because it's like the market moves together. So like naturally they're all kind of similar. So something might have happened here that caused everyone to think the market was going to go down for a time. The reason that I'm really interested in it though is because of the possibility of this being halfway point, because that would give us a sense of timing that we just don't normally get. I've done the measurements other ways and gotten really long, far out timing. So if you're wondering like, well, haven't you already done that? Yeah, kind of. Timing is a tough thing in the market, but this could give me an indication of time. It's exactly 2 years from election. So it's like the halfway point. Fascinating. All right, so November 8th, that's midterm elections, right? Things don't go well. If you're not from the US of A, there's a election year every 4 years, and then every 2 years is a midterm election where different people are up to be replaced. Senators and junk, House representatives, stuff like that. It's important because a lot of times when you get like a Democrat in the White House, you know, your Republicans will try to win midterms because they want to win back House seats so that the White House, you know, executive branch can't do anything. What a lovely country we live in. We're just trying to stop progress on both sides. We don't want you to do anything. We don't want you to do anything. It's checks and balances, though. So yeah, if you're not from the U.S., that's what that is. It seems a bit odd how stupidly obvious that was. Because I think November was when the breakdowns started too. That was in 2021. November is just a bad year for, it's not 2 years though. In this case, November 8th is where it took off. It's like back here. That might just be because Democrat won, so it's an EV stock. But I think there'll be another reverse split to screw over retail again. I don't, but I'm also very optimistic that we're pretty much at the bottom, or very close to it. I know I've said that before, and it hasn't really worked out. Look, I personally don't think that we're going to go lower than $1. And I know that if we did that, we definitely would reverse split. But I know that that's frustrating to hear, and I know people don't want to hear that. But it's how I feel about it. So, okay. So the reason I was doing this was I was trying to see if there was a correlation between the all-time high here, which is really close to the January run-up for us. It's almost the same level. November. Wait, is that the same level? Can't be. Is 2-year cycle bring it right back to the same place? That's really strange. I gotta see it. I'm sorry. I know some of y'all don't care about ChargePoint, but it's part of my little mini investigation here. So I'm picking like a third stock. That's just the one I had up, so I'm gonna use that. And I'm curious. So let me see here. November 8th and 9th. Well, it would have been the 9th because the 8th wasn't a trading day. So November 9th, 2020 in November. I just said that. What's the high? $18. Well, that's a really clean number. Makes it simple. And what's the low? $16.60. It's a pretty big window. I'm going to do the same. I think I'll probably try to do the same thing for AMC here, but whatever. I'm going to get close enough. I don't really care that much if it's perfect. No, I proceeded to make it perfect. All right. The reason I'm going to do that, I'm going to go back and look. Yeah, all right. So we're a little below, but it had gotten there. I mean, it was there right before the elections. Probably a lot of people closing out positions, I would imagine, year over year. So it's a 12 months period, you're right back to the same spot you were. And we start down, it drops down to $12. Oh, wow, yeah. You can see it actually tested that trend. That would have been the all-time trend. It tests it after the first big sell-off in January of 2022. You can see the RSI goes really red there. January 24th, 2022. So let's check out GME. I'm going to mark off January. There's a reason I'm doing this. I'm going to see what happened here. January 24th. Yeah, there it is. There's the check on. That doesn't check that line though. But it does test. I don't know what that's testing. Moving average, 180 weekly. Maybe it's this downtrend. So that doesn't really seem very meaningful to me. I don't know. I mean, if it doesn't work, it doesn't work. I'm not gonna like force it to fit. I'm just curious. January. Oh, that's where we hit near bottom here. Interesting. So here's what did happen though. In all three stocks, there was a run up that passes through a level. This is kind of fascinating to me now. There's a run up that passes through a level that was previously like a preliminary support or supply or something, because this is like the halfway marker, right? This is where you kind of, so what we're doing is we're going backwards. We're looking at how the market reacted, where it was going during this time. So this whole run up is kind of squashed, but we come all the way back down and we're checking previous support. It's kind of the only support we have from way back. Preliminary supply, $11. Yeah, $11. So it's from the preliminary supply way back in September. But I don't think that that value matters that much, because like September for AMC was not the same thing. Like it was way back here. I mean, it was on that upthrust. It does, however, go back and check that same supply level. So let's just say, for example, you're thinking about this as just a run up, ignoring time. There's a run up, and somewhere in the middle we stopped and reaccumulated, right? And there's a an important marker that you've made because you've come back up and you've created a little range in the middle. And all three of them do the same thing. They're all going back to that kind of middle range. It's harder to tell on GME, I think, because I would argue that the middle range was like way back here at 4 and it wasn't way up high. Maybe we could chalk that up to like the whole short squeeze methodology of people not selling. It does, however, come back to a level that looks like was a stopping point around $19 in the January, during the January run up. Otherwise, I don't see a huge significance. Like, I don't personally think it's that significant. It could also be that that was something else, because charge point's a little different than AMC. It's a little different than GME. Obviously, we don't have perfect one-to-ones here. So for charge point, it was actually checking a trend. In AMC, it was just the level. It could have been checking this guy. Yeah, it seems likely. Because then we did a double up thrust here and hooked above it or below it. So there's a mild trend that was, I wouldn't say mild, but there's a decently mild trend that was occurring during the run up from October through January. That trend is retested. Maybe it is the same then, because I think we did the same thing here. There's a trend and it's retested right there. See that? So they are identical. It's just not what you would expect. And then it's in a slightly different spot. But it is checking that trend. This ends up looking a lot like a head and shoulder, right? So it's weird, huh? Weird how that, you start looking at the comparisons, you start seeing like bizarre things. Okay, let's go backwards now. So that hasn't really yielded too much of great interest. But we do know that that was the really, really low point for RSI for charge point. So maybe I should have checked that. I forgot about that. Was not the lowest point for AMC. It was a very, very early low point for GME. So I think there is significance in that January date, but I don't think it's necessarily super critical. It's just somewhat significant. Now, let's do a measurement. Let me get rid of some garbledy-gook on here. I actually need this chart to be a little cleaner. So I'm going to get rid of I don't want to get rid of everything, but I guess I could just save it. I don't want to get rid of it because we had a question about, do I think that it's hit a bottom? And I mentioned I drew a line way back. It's this guy, this $1.25. This is a proportional level change. So what I did is very, very simple, is that I found supports that are equally distanced from each other. And this was the next one up, and it was $1.25. So that's like the next support. I don't have one below that. I could draw one below it, but that was the place I thought if it did jump over this creek, it could come back down that low, and that's what happened. It jumped over like the downtrend, what I believe is the main downtrend here, and then it's come back down to hit that marker. So it's checked out that was the hit. I think it's possible that's the bottom. Another big indication here is, guys, I know that I've talked about charge point a lot, and some people are just super uninterested, but I really think that this is a possible big moment for this stock. If it can hold this bottom and jump the creek, look at what the setup is. It's a massive, massive, I mean, really, that's like quite a bit of time. October to now, let me count it. October, November, December, plus, we'll just say 5. So that's 7 months of possible RSI divergence. And it's kind of wedging too on RSI. This is on the daily, so it's a pretty decent time frame to look at something like that. Now, does that mean it has to go? No. But that's the kind of divergence that we had like a 10-month divergence on AMC right before its huge move. So to go from like a historically very, very low RSI and the price moved much lower, but you see that? Like historically, this is one of the lowest points RSI has ever been at. That was back in October of 2023 for charge point. But the price has come down more, but the RSI has come up higher. It's a decent sign. You still have to wait for confirmation if you're just like, well, when would you buy it? Because, I should just be buying it now is what you're saying? No. I can't tell you to buy anything. But I would say this is the main creek line. So I know that a lot of people are like not interested in this stock at all. I personally think most of your EV stocks are going to end up getting a pretty big boost going into elections, but it's hard to say. Timing's tough. This one's taken a lot longer than I wanted, but I think it's kind of bottoming, and that's what I've been arguing anyways. I think it's in a bottoming stage here and here, and I don't know, that divergence, if it can hold, is a very good sign. So I think if it can break back above 160, this thing probably going to go back up to like $3 to $5. It's a big move. Not as big as what I'm saying for AMC, but then again, look at where the stock has been before. Even in the case of like a downtrend, which is what I have drawn here, coming back up on that downtrend would still be a significant move, but breaking out of that would be really significant. So hard to say. All right. My big thing, the big question that I forgot to answer was, where's the 50% mark? And it looks like it's way beyond. And I guess this would depend on whether you think it's a 50% price mark, and it's definitely not. That's kind of easy. If I go down to where it is now, it looks like the 50% price mark is this very, very straightforward breakdown that happened back in September 2023. That's kind of obvious. It's sort of like us when we had the reverse split kind of deal, that drop off point. But it's the middle of that M that I'm kind of curious about, maybe for timing. So I'm going to look at it. I kind of feel like I already know the answer. It says October. Well, shoot. Should I measure from the top or should I measure from the bottom? I don't know. Guess we can try both. No, that's September 26th. It's getting really close, obviously, to the election day. But it's not quite there. So I'm going to measure backwards to... Do I already know the answer to this? Wouldn't that be the same thing? That's just going to be elections. What does that gain? It didn't gain me any knowledge at all. Why was I doing that? Because I thought it might be a 50% S-curve move. Yeah. Okay. Well, the arguments apply the same. So what it would tell me is that the kind of the obvious, that your election is probably right where the 2-year mark would meet again, and that's the whole sort of cycle, up and then down. So what it could tell me is possibly how to draw it out. I don't know if this is going to be perfect, but I'm going to try it. So what I'm going to do is take the same approach on AMC in a minute. I'm testing it on charge point. So what I'm looking at is one election to the next election to the next election. I'm going to do my best to kind of, I don't know, we could use the high or the low. Let's use the high since it was easy to remember. And it's going to yield a lower target, which is more... there we go. Forgot to turn all that crud off. That's interesting. Okay. And then this distance here to here, I'm just looking at, that's so perfect, it's disgusting. It basically goes right to this point, the breakdown. Yep. All right, so let's zoom in. I'm going to make this a tighter mark. I know you might be getting a little antsy if you're just here for AMC, but this is for science, I guess, so we're going to do it. I have to test it on any of them, so I mean, it's going to be prudent to do it on all three if I can. Let me see if this is really relevant. Well, we don't know what that high and low was, do we? I actually think I eyeballed it pretty well. It looks like it's right on it. So the high here was 1220. Yeah, I mean, I think I eyeballed it really well. So I went from high to high. What's the low? 1116. Now I'm really curious if there's a way to draw both of them. They look almost the same, don't they? They look like the same distance from each other. That's curious. Maybe it's like a channel, like a center channel for this giant wave. Yeah, maybe. That looks really close. I mean, if it's not exactly on it, it's not a huge deal, but that looks really close. I gotta move this sucker over. Let's just make it right on it. I don't know if the angle's perfect, but there we go. Someone's gonna be out there like, Booksy, why don't you just use snapping and just snap to it? I know, being stupid. I guess I was trying to eyeball it to see in the future where it was. I wasn't really thinking. All right, I'll just do it. I'll just do this. We can extend it. Crypto can be used as leverage on stocks. Well, I think it would just encourage shorting if that were the case. I mean, that's, I don't know. Anytime leverage requirements change, there's usually some kind of significance, but it's not really something I know a whole lot about, other than what we studied with the whole China thing a while back and got into that. Yeah, okay. I think that's it. You can see it's got some serious, I mean, there's a lot of gravity to it. You can see there's a lot of pull to this area. I know it looks like it doesn't hit that much, but kind of look at what I'm seeing. You're just looking at where is support being found, where's resistance. On a diagonal, that's a really strong line. And then here especially, look at that rejection. There's like a double rejection here and here. Really, it's a triple rejection because it also happened here. What are you doing? Beazle. A dummy sometimes. It's my cat. All right, we're almost there. I'm gonna do the same thing for AMC in a minute. Okay, well, so the simple answer here is that if this continued, this trend continued, what is the answer? My head. I guess the answer is if this trend continued, you would be up here. I mean, it sounds silly, but if the goal is to kind of keep a consistent direction, waveform every 2 years, which are the election season years, you would basically be back to this particular trend. See this? So this is your wave. I know it seems a little silly, but it's kind of the way things often work in the market, is that you kind of come back around full circle when you need to. That's a pretty strong line I drew too. Kind of works out. One of the things that kind of bugs me is how this hit the bottom here and then rejected. It's like that cycle in the middle is really strange as well. Very odd to me. I'm talking about from here to here. You see how that like is pivotal? Like this is the time it spent in the middle, like testing. And then it moves really far away. How far away does it move? So this is a $38.77%. It's an estimation. $38. I'm just going to do some simple math here and take a look. And then this is obviously an opposite move. Where are we? What are we at right now? 133? It's really close. So it's a $6 move, but it's 82% move down. Now I'm measuring from the point at which I think it's even measurement-wise, that it's an even measurement. I'm not measuring from the actual line. I'm measuring from the time. So it's a time-based measurement, not just from the price in the center. Yeah, so it's about, you could say 83%, $6. I'm going to go with the percentages then. So here's why I'm doing this. It doesn't look like it immediately, but that's the same, like it's the same percentage move here and here. That's really, really important to me. You guys are like, where? This move and this move from these time points are really close to being the same percentage move. And that, to me, smells a lot like rotational symmetry. And rotational symmetry is just a waveform, like going from distribution to accumulation and back. I know you're probably thinking what I'm thinking, which is why not just go right back to that point though? Like if you think that's so significant, why are we not drawing the trend from this peak over here through this bottom and that one? And I guess I don't know the answer to that for sure. I'm not positive that I'm doing it 100% right. That could be the right one. The reason I used these other ones is because of the election. But it's possible it's this lower orange. I'll make it like blue or something. This could be like the since this is where the breakdown happened and this is where that hit is, it kind of makes me think that could be it and not what I'm doing. But this kind of goes back through, I don't even know. I guess it goes back through that support. All right, that seems possible too. So I'm going to keep that as a possible target. It's a little more common sense to me, but I'm also doing something I've not really done before with the whole election thing. All right, so what's the percentage move back up? So from here to back up, that's 500%, but then the bottom here is $6. $6, that's like too perfect, isn't it? That's gross. Is it $6, Booksy? Or do you just want it to be $6? I don't know. Let's get to the point. It's not quite $6. It's like $6.15. I mean, it's really hard to know if I'm getting this super accurate anyways. I'm way off over there. What the heck? I'm not even close. All right, forget this. I'm just going to snap it. Trying to do this some fancy way. It's not working out. I'm trying to base it more on like intuition of where I thought it might go backwards to instead of just putting it on the snap. Mm-hmm.
Oh, can I wash my arms?
Mm-hmm. Yeah.
Really?
Yeah. All right, so that's significantly lower. And that's actually more in line with the price target that I thought originally, which is around 5. Well, that's very comforting to me because I'm finding that the giant waveform on here is supporting a 560 target, but it would be around elections. So, okay, so let's do the same thing here for AMC. Yep. I'm liking that. I like that move, huh? I don't know. It feels really strong to me. This concept of like the waveform moving away from a center mark and then back to it, like, and then striving against it and then moving away and then back to it, and doing that in sync with like an election. Seems like a really simple setup. Okay. Let's do it with, let's just do it really quickly with GME. Now that I've done it once, it should be easier to do it again. So let's hide, no, we need that one. Let's get rid of the fib thing. I'm gonna keep these other levels. So it's not that messy. So now that we've already done it once, I should be able to pretty easily do it again. So I know what I'm looking for now. And then it'll be even faster the next time. So first marker was 2020 elections. This is almost the same as charge point. There it is. There's the 9th. Of course, it's the same. That's weird, isn't it? So I pointed this out earlier that I thought that was the bottom here that we should be drawing the line through. It's the same marker. Or roughly the same marker, I should say. Same time anyways, which is weird. Okay, so that's one. And then we've got the next 2-year cycle to November. So I've marked January. Oh, I moved that out of the way. I marked January 24th. But that's just like that middle area. The next one's really in November. So November, what the? Wednesday, November 9th. What? Oh, I'm on the weekly, that's why. It's not, I was like, it's not working. I can't actually pick the right date. Smooth. All right, yeah, that's the breakdown here. Interesting. Yeah, there it is, day after elections. So, and then if my if my theory is correct, we should be able to measure this out, and it should give us the same date, but it would be like a significant point of yeah, maybe. So what is this? This is September. On this one, it's September 6th. Why did I pick September 6th? Because that's where the breakdown was. And also the measurement was. So why is this measuring out to August? 24th, November 9th. I guess I could use time cycles instead. There's a tool on here. It's called like time cycles. You'd be a little more precise. I probably eyeballed it on a little bit on charge point, which may kind of skew things. All right, there we go. There it is. So I made sure to do it correctly on this one. It looks like August 30th or September. I don't know. That says August 30th, so that makes me think that this one is off. But if it is off, it's not off by much anyways. It's like a couple days. It's only like 5 days off. That's really close. Yeah, it looks like you hit the bottom on the 30th, like here. I don't know. It's basically the same. I'm not going to worry about it. So that was a significant breakdown for charge point, and I think it's going to be significant for AMC as well. But this is where you kind of meet the big drop. This is where that second part of the drop happens. So on GME, I'm gonna gently kind of want to see what if that matters at all. Ooh, weird. Yeah, that would be that's probably the wave here, or a wave. I wouldn't say the wave. That sounds a little silly. So to me, it looks like it goes all the way back to this hook way back here and this trend up in 2019. All right, so it is a significant point because it's kind of meeting this old trend. It's had a huge reaction almost around it, which probably makes sense. And now we need to do the measurement stuff. So we already know the next date's out there. So that's not really a question. We think it's election. Friday is the election day. All right, and then let's take a look. So we think, as best as we know, that this was roughly the same. It wasn't exactly the same. So where am I measuring from? Just the top? I don't know, this is such a weird chart. It's so different. See how charge points all going down? So if you go back to that original date, it's like downward here to here. But like GME, if you go back to the original date, it's upward. So I'm not sure what to make of that just yet. That's a pretty huge move, 83%. It's really close to that charge point move. So that's an 83% decline. How much you want to bet AMC is like the same or similar? So from the breakdown here to where we are now, it doesn't look like an 80-something% move. No, it's only 49%. So that's really different. Let me try one more thing. So break down here. I'm going to measure down 83%. From here is really low. It's like 350. Weirdly, that takes you back to this point. Like it's almost halfway. So like, let's say for example, we instead of measuring like 1/2 and then 1/2, we just do a simple sideways measurement. This suddenly makes a lot more sense of the chart because you can see the move has like a midway point right where those two markers are. So for charge point, it was at an angle. It's like support and then resistance. See that? So it was finding support here, and then it found that this was now resistance, this line that we were charting backwards to. So that cycle, this is where it was bouncing, went sideways, and then dropped. This is where it bouncing sideways and then dropped. It left it behind. Now technically it came below it, but the last time it tested it was here. And I'm not positive I've got that drawn 100% correctly, but that's pretty close. So it's not a horizontal. It's almost horizontal. It's like that. Let's snap it. Or not. We're almost there. We're about to do AMC. This one's about done. I guess that's it. I think it looks lower because of the time thing. What the heck? Come on, man. Yeah, it looks lower because of the time thing. I messed it up. I don't know. I kind of like the one on September 7th better. Wait, what? It is on September. Oh, I moved it over to the side. Gosh, man. Killing me. All right. That's because it is the one there. All right, yep. There's the rejection point. Weird, huh? This is like gapped right through it, and then it found a weird, bizarre support on it, and that super double gap looking thing. It's so bizarre, isn't it? I know it's different, but I think this is what I want to do here. Yeah, and then it's trying to get back to it. Okay, so we've got the move down is not nearly as much. I wonder if it was supposed to be like a 50% though, or if it doesn't really matter. It could just be like a Fibonacci percentage. You know, this thing dropping down to $4, it's again, it seems awful, but that 466 is where that 618 is. And if you look at where $4 is, it goes back to that. I know I've got the 618 there, but if you go back and you look at where $4 is, check out where that's at. It's right here. We were just talking about this. That's that cross point from back in 2019. Yeah, I wonder if this was possibly dumping down, trying to get there, and it just didn't make it. It found support higher. I find that to be really curious. Yeah, because that would be roughly the same amount. It's like 78%. Look at the RSI though right here. Kind of reminds me what happened back in this time period. I think GME is in a killer spot right now. It doesn't mean you can't have more downside before a turn, because technically, like, you know, it ain't over till it's over kind of thing. You could have a little more and it would still probably keep the deviation. But this also has a daily deviation that's very divergent. Here, I'm going to make it bright red so you can see it better, because this is a little different. Look at what happened here after it hit like a really low RSI. And then check out that long-term deviation. And then look at here. I know it's coming down at a weird angle, but check out that as well. That looks very similar, because this is the massive drop, you know? The first massive drop's here. This is like a halfway point. You measure out from the election year outward, the second massive drop's right there. That deviation is undeniable. Now, that being said, you know, I'm not sure we could find a lot of other evidences that this is definitely what it has to be. But I am curious if, let's say for example, this comes up and it stays at high until about July, and then it takes off going into elections. Again, it doesn't mean it has to fly like the same way, but it would probably, if it did jump the current trend, it would definitely jump that EMA right there. That's the same place that you see it happen here, is that takeoff happens. So it's been in this long-term depression downtrend since here. there's kind of a false sense of breakout early on. And then that's ultimately where it takes off from way back here after it finally catches up. Like that deviation kind of catches it up. You see it break out. It's pretty strong. And that's the same marker here. So this backup that happened in an election year, and it backed up and then it ran, but it was the jump over the creek. So the jump over the creek happened in tandem with the election. So if you still think it was just retail, that would probably put a question mark in your head. Because this setup happened long before, you know what I mean? It's kind of crazy. All right, this is pretty significant. I don't know what else that could mean, so. The other issue that I'm running into right here is that it's not, it's not mathematically making a lot of sense. Like on the bottom of this sine wave, I wonder if I'm missing something really obvious. Like what if we do this? Because this is where we hit that trend. I know it sounds odd. Is that the same angle as the uptrend I've drawn? It's really close. It's 19 degrees. Can't tell. This is 163, 163. It's really close. That's fascinating. It is a parallel. And we need to stop thinking about this so linearly, like, or I should say horizontally. Maybe we should think about it more on a as a giant like rising channel. I'm gonna irritate a lot of people here, I think. Let's go from top to bottom. Hey, that's not the top though, the top's back there. Yikes, that's really close. Look at that. I'm gonna snap to it. Snapping tool is like way too finicky. I don't know how they can make it better, but there. I just want, it's like a hard because you got to go down to like a pinpoint. I think we're figuring it out. Look at that. This is a really good fib channel. This is an old school fib channel, so it's not exactly like super surprising. Okay, so it doesn't shock me in the least that this is like a 786 marker on that fib channel. I'm gonna get rid of these lines now so you can see it better. And that midway point that we hit was the 50%. This is the 50% right here. So we just added another layer to this that I wasn't really thinking too hard about. You know, it's possible that you could measure this slightly differently from like the all-time high previously or something. I'm using what I believe is like the hook line here, which is that second distribution that happened, that last high. You could use, instead of that middle cat ear. Wait a second. Did I just answer my question? Where the heck did I ask that question? Didn't I just ask, can the middle cat ear be used to predict the high? I think I just answered my own question. Yes, it is. Crap. Yeah, so on GME, it's 100% a reliable indicator because this is the cat ear marker, and it ends up predicting where you're going to land for the all-time high. And this is the middle of the cat ear. Now, I think that the challenge in that would be that, you know, when you look at the whole range, it's kind of like, well, is that really the middle? Yada, yada, yada. I mean, the way I did it, no. But the main reason for that is because I didn't use this original point back here. I used the high to high. So I went from all-time high, or I went from previous breakdown to the next all-time high, which would be like the fib retracement level. But I think if you use this instead, this is the actual midpoint here. So it's kind of interesting because yes, and the answer is like yes and no. Like it is reliable, but only if you use the right point, and that's a skill. That's not something that you can just like magically click a button and have it work. You'd have to sort of identify that lower trend as the midpoint. You can see the rise there. That's pointing to the eventual top. So that's interesting. Really interesting. So by doing that, it changes the chart a good bit. So if I use that one instead of the other one, you can see that it looks like there should be a new low. It does dramatically change the chart. I lose some of my touch points, but I gain other ones. You know, it's kind of a mixed bag. I would say that looks a lot stronger over here, though, doesn't it? To me, it looks really strong as a... Yeah, see, it almost doesn't matter too much, because if you're just using it as a way to estimate, it's pretty strong. If you're using it as a way to predict exact prices, then yeah, it makes a significant difference. But in terms of like, where were these going? Like this is your 854, or excuse me, 236. This is the 3. This is the 5. The 5 is interesting because it's like right after this midpoint, it drops, and there's a gap too right there, I think, and it goes beneath the 5. This is your next one, the 618, 61% retrace. So if you measure from top breakdown point to bottom to top, this has already hit the 786. But if you measure from the middle of the cat ear, this is actually not quite there yet. You would need to have another drop. It's right at earnings, though. So I said earlier, I didn't think this had to be the bottom. It could make another low, and it looks like it's right there. It's close. This is a tough one. It's tough because you have to pick out the right one. I like this line. It has 1, 2, 3, 4, and then 5 current touch points. I like this one a lot, and I think it's the closest one. So what this tells me is that in June, the stock may be somewhere, I mean, it's hard to say, y'all. It's like, is it close enough, or is it going to go there? Where is this at? Yeah, that's it. Look back here. That's the previous level at 968, 965. So you get to 965, and then that could be it. That's your 786 on the Fibonacci, the rising Fibonacci level, and it happens to be really close to what we would look for in that rotational symmetry. So the rotational symmetry is doing this. You're coming down to here, January 20th. I moved the point for some reason. And then you're coming across to August, and then you're going back down. That would still say you're going to be low, though. That would say you're not going to be high. So why did I think it was going to come back up? Oh. Because it doesn't go to there, because it goes down, that's why. Sorry, I messed up. Yeah, because that's not where it starts. The rotation doesn't start at the peak. It starts here at elections. That's why. So you go back to November, and then you can see it's different. So yeah, it should be going away from it. It might be prudent to find that measurement, but I'm going to guess right now it's earnings. Well, then where the heck does it go? I don't know. Let's go back to election here. That's a really significant move. That's way beyond. It's 233. Still, I feel like I'm getting an interesting little timing structure here. That's kind of significant. All right, so let's take that one step further. I mean, really, if you're making it like pretty exact, it doesn't seem like you take off at earnings. It seems like you take off later in the year. Maybe our friend Glenn was right. He said October. Could be. I mean, this is only if it's perfectly symmetrical, which is that's a big question, right? So it's 54 bars or 80 days. Yeah, and it also makes you ask the question, well, why would it run before the election and not wait until after? I don't know. I'm not sure if I can answer that. I think that's a good argument to make against me. August 22nd. Well, that's something. Why does that matter? Because August 22nd was, the 22nd is when we had APE. Remember on AMC? So you go back to August, it was like August, it was like August 22nd or something, 2022. And then I think it was August again here. It was that reverse split date. So it's like another perfect point of symmetry. All right, let's do AMC now. So I've kind of answered a lot of the questions that I had as we've done these other two. So let's do AMC. I'm curious now. So I'm going to do the same thing. In order for me to do this, again, I'm going to have to kind of remove the stuff on the chart a little bit. I think it just helped to see it better. And not get too wrapped up in anything else. Let's just focus on one thing at a time. And then let's look at those dates. So one of them is January 24, which I guess is a Monday. And then we've got another one on November 9th, November 9th, November 9th. The other one's on September 1st or thereabouts. It's close enough if you get September 1st. And that's September 1st of 2023. Yikes. Yeah, that's our low. Look at that. That's our low RSI plunge, the big plunge. So all of these stocks, I mean, only AMC had a reverse split, but all of these stocks had that same dunk. Now, it doesn't time out to be the same exactly because AMC dropped before them, technically. They all have that same drop. So, you know, we may be crying foul saying like, oh, it was because of the reverse split, but it looks like it was already in the cards. These other stocks also had a significant drop from that support on that same time period. That long sideways action that all three stocks have here. It's not exactly sideways, but it's a channel, if you will. They all drop out of it at the same time. And they did not have reverse splits. So that's pretty significant. So I'm going to look at, you know, I can't really tell for sure what's going on with this date. I think it's odd because the drop is clearly already happened, but the same thing applies on these ones. Like, they're not perfect. The drop was around that end of August into September, and then the RSI, like for ChargePoint, the RSI didn't come lower till after. On GME, it was a significant low point, but I think all three of them have a very similar chart where you've got this kind of sideways action on or around that day, right? Or that's where it kind of starts doing that same weird like sideways business. Here. And then I think GME, it's like, yeah, it's doing it. It's not that different from what we've already seen, but it's downward. Notice that the rest of these are upward. Like they're buy ups, buy ups, buy ups. This is like a downward motion. So it is doing the same thing. It's that same movement down. Really bizarre. I'm saying it. I really do think they're all bedfellows. I think they're all the same operators. I really do. Which tells me, again, maybe IWM is the thing we really should be watching. The small caps and seeing what happens. They're all in like a basket or something. Okay. So let's mark out the rest of this. Let's get it done. That's November 9th. November 8th. November 9th. Yep. There it is. There's that midway point. Right there. For that flat area. I don't think I've ever thought of this as like a singular. This is crazy. So let me get this straight. Yeah, I'm sure. Let me get this straight. I mean, I've been talking about the Russell for a little while as well. I think that everybody's kind of noticed the same thing, which is that the small caps haven't had their moves. Like the SPY and the larger companies have all had their big moves, but the small caps have not. And inflation will do that, right? So it's like the debt crisis hurts the smaller businesses a lot more, typically. It's harder to get money when you don't have as much money. Does it make sense? So you're going to go further into debt. And then when the interest rates go up, it's more expensive to borrow. So there's a lot of debt restructuring going on in these smaller companies as a result. This is kind of disturbing. To me, because this is bizarrely predictive. I'm a little bit confused. Like, how is that possible? It might be because maybe I'm feeling confused because the reverse split wasn't even on my radar back then. I remember drawing this, but I don't remember feeling like it was super significant. Or maybe at that time when we were doing that hover business, here, this is the marker that meant like 250. Because I think the after hours drop was way over here, and it went down to like 3 something down here. So maybe this was the low. Maybe this was 192, y'all. You know? But because of the way the stock was, it's so confusing. It's still bloodied up our positions, but all right, well, all I know is this, is that depending on how you draw this, it's a little different, but they're pretty similar marks. And that kind of freaks me out. It makes me feel like this was, like it was always known we'd come back to this marker. But to have that apply in forward thinking to a reverse split chart is kind of hurting my brain. I can't quite wrap my finger around it. Maybe it'll come to me later. I'm not sure. It's just bizarre to me. You know what I mean? Like, it's strange. I think that's really strange. It makes it sound like this was predictive of where we would end up. The short's always that's a weakness, I guess. The sign of weakness creates a trend, and then we broke down beneath it. Okay, so we've got that marker. Let's move on. So we've got the same markers here, here, and then the thought was if the rotation plays out, that you'd end up back at the same place, potentially. I think it's debatable. So for this one, it was 550. For GME, I don't know. It seems ludicrous, but it seems like it would be way up here. That seems wrong to me. But I can't be sure. I guess if it only went back to that marker, it'd only be at like $17. You know, so there's one theory here, which is it would go back and rotate back towards the support, like that mid support, and that's really where you'd be. The other thought is that it rotates through the center mark in a waveform pattern. So it's whipping around it. So this is like pressing away from it, and then there's a big reaction. I'll have to sort of put my brain to work and see if I can figure out which is the better way to do it. All three charts have a very similar patterning. They all have very different levels though. And then the way that this thing is setting up is really different. Depending, yeah. And then the age of the chart also makes a huge difference. GME has more time, and so you have this channel that goes way back. And I think there's a similar channel for AMC at that 2016 mark, because there is a cat ear there. But there isn't one for charge point. Does that make sense? So it may be that the first one we did is just a little weird because it's not this, doesn't have the same kind of markers. So it makes it challenging to do that comparison. But I'm gonna do my best. So here's something that's not as good. Well, let's check the daily before I say that, because I could be wrong. I'm not seeing a huge divergence for AMC. There's a small one locally here. That divergence does not, however, go back to that big drop, which is strange because you would think that big drop would be the biggest one. Maybe because that was the reverse split, so it didn't have the impact. It did what ChargePoint did, which is after it drove down, it kept driving further. Like there was more selling happening. So the sell-off and the low actually happened after the fact in October. That's very similar to what we see in AMC, but it took even longer. It was like way down here, January. So that doesn't matter too much. I'm just kind of pointing it out. Yeah. All right. So perhaps this was like the widening. It's so confusing because it looks to me like that should be the breakdown point, but it's actually way down here. I'm not going to fudge it though. I want to keep it the way it is. I'm not going to put it up here just because it looks more like the others. Yeah, I want to keep it consistent, so. Okay. So there's also some other things here that matter. So in the event of ChargePoint, ChargePoint's the only one of the three that seems to have that support actually run through significant markers at these elections. So like the run starts right on the election, and then it runs through, it creates those two supports, and then you can see it's like a pretty concise linear line. But the other linear line, the other ones the other ones don't. Like you can't make it work. It's like an arc or something. Because if you look back where the election was, it is near where the run starts. Don't get me wrong. Both of them have a pretty significant impact, but neither of them have a line that marks. So in order for it to be the same, it would have to be a curve or something if you really wanted to try to make that happen. I don't think that's probably the best way to do it. What that leaves you with is one huge inconsistency, which is that on ChargePoint, which is what we first measured it on, this looks very linear, but it's all connected. But I don't think that's going to be the case here and on GME. I think you have to make that. You're going to have to make that step. So it's just going to be different. It has to be. So instead, what I'm going to do, I guess it's got to be this. I feel like I'm being really biased. And I feel like I'm just pointing up, but you know, for ChargePoint, I was pointing down. It goes from like election to that breakdown. That's it. So remember how I said on charge point, why is it doing the same thing? I thought it was odd that on charge point we got to like a really similar level. I didn't draw it out quite that way, but we got to a similar level as where we were back here. So it's kind of like a reset for the market almost, like right there. I wonder if it's like the first downtrend. Can you go get the cats? Did you already feed them?
I didn't. I thought you did.
No. I've just been talking my head off. Trying to get through this. All right, so this is kind of interesting. So if you go back to the original level here, or the original trend, very original trend on charge point, the first two bottoms, that's where we went through in September. Bizarrely, yeah, we're higher up. This ends up being really critical because this is like I would say it's like the major trend, right? Going from election year to that same September 2023. Check out where AMC was in that September 2023 versus where it was in November. It's in the same spot. So I'm starting to think this has a lot less to do with what we think it has to do with. I think it has a lot less to do with that short squeeze and has more to do with the election cycle and this weird little timeline we built. Somebody is playing on this cycle or on this wave. Let me put it this way. This is the operator's aim here, I think. I think they use that reverse split, but I think that's it. That's the waveform right there. Now you might say, hey man, that's weird though because that's not the middle point of that thing. I know, but I think that's the goal. That's the reset. The charge point one's the same way. It's just resetting on a different wave, but it's the same idea. Like this is still the upward motion. And then specifically, they have different targets in mind, but they're pretty darn similar in terms of end goals, which is like, hey, we're gonna kind of pull it back down to some early level that we had back in. There's the March drop too, from COVID. So like March bottoms is where we're going back to, and we're going back to early trends. There it is right there. That's a pretty clear wave. This is actually the midpoint on AMC as well, right in that January one. See that? It's like more or less, I wouldn't say it's not perfectly a midpoint, but it's like more or less right around there. March. There's March. That's the waveform. And then we go hard the other way. The waveform is going the opposite direction. This is where people will get like worried because they'll think like, well, is it going to take that long to get back up there? I don't know. I mean, it's possible. But I think that's probably it. Waves are pretty straightforward. Curves, I mean, it's just a movement, right? To try to get you back to a specific place. So a center mark, if you will. I feel like this came up a lot too. This is the $14 mark. That's the target that I got when I was doing 14. Well, I don't have anything against Ant, but he seems to try to call me out a lot, so I don't know. He needs to be a little more careful. He said we weren't going to drop to 6 when we dropped to 6, you know, like that's the last thing I heard from him. He's trying to make other people look bad. I don't feel like, maybe I'm doing the same thing, but I'm just saying it's not usually how I try to go about stuff. All right, so this is the reset point. I don't know why, but let's take a look at one more thing really quick. So this is what I'm getting at. If we want to conclude that what we're going to do is go from this very first November election through the center marks or through the center mark, right? Then there's a lot of places that we might say, like charge point could go up to 8 instead of like 5, for example. Like that would be possible in theory. And as it stands, this is a pretty decent indication of a middle for a 50% retrace. So it ends up being like almost a perfect 50% retrace for charge point. It's not the case for GME, and it doesn't really work for GME to do it. You can't really keep it that simple because, yeah, you could do a 50% retrace. That's a simple enough way to kind of find out if you're right on the money, but that doesn't give you the center. It makes it seem like we should be going further down because it's not adding up. It's not the same mark as this other midpoint here at $26. And then you might also say, well, maybe that's because GME went farther than it was supposed to or something. But I'm not buying into that either. I think it's possible that GME does need to drop first, then reverse. And we might see something like that. I've already said it earlier in the stream. There is already a divergence. So it looks similar to the divergence that happened back in March. So what I'm getting at, I guess, is everything seems to be coming kind of back to roost. So if we look at the charge point trends and where we were in that election year on November 9th, the trends that are established are driving you back down towards the original trend. So after the election, let's say you have a buy-in here, right? Oh, it's election time. We bought in charge point. We run this whole cycle, and during this cycle, we buy up high. So we basically pump it and then sell off, okay? And then we're going to camp out right in this middle area and drive the price down to a previous trend or support level. Some of it does seem to go right back to elections, but we're camp into support. So we're going back to a reset point. So the market's resetting here. And I'm just talking about the ones we're looking at. I'm not including GME at the moment, but I'm going to try to do that as well. And then the rest of this is like an inverted reaction. We're moving away from what we would be considering that kind of reversal, that reset. We're actually going the opposite way. So it's almost like liquidity test. And if I'm looking at this as a simple wave, this would be your upward motion, and this would be your downward motion. If we were going to do like an S-curve, it may be prudent to just go ahead and do it that way. We're doing an upward motion and then a downward motion. And in terms of like where those 50% markers are, I don't know. You know, it's kind of debatable. It's basically like this. And you might say, well, we're way far off. Does that mean that it's supposed to be going steeper? Is that a steeper move? Shouldn't we make the S curve like come this way? You know, I don't necessarily think so, because this is the extreme. You see this? This is the extreme point. I mean, it's the farthest point up. And we could do that where we try to drive the price through a particular target and see if we can make it work here so it's all one line down. But the thing is that's not the target we're interested in. We're not interested in just this bottom target. We're interested in the reaction target. Because remember, this came from somewhere. This came from that election. We're thinking that this is going somewhere. It's going into that election. So we don't necessarily need a target that's down here, because that's just giving us the peak, like the selling climax, where this was like the buying climax. So we could finagle this until we figure out where that selling climax is. I'd say it's probably like that, you know, down here somewhere. And we're doing kind of what we see in reverse. But what's more interesting to me is like this particular setup. Like, where are we really trying to get to? Because this would be like a slingshot move. You're seeing that downward pressure, the inversion on RSI back to all-time lows. Now you're literally getting a divergence. And then you're going to slingshot back just like you did here, but sort of in reverse, right? So we're trying to do the same thing for AMC and make sense of it and make it so it's kind of the same. So yeah, you could do the same thing that I just did on ChargePoint, where you can look at, for example, this is what I've been doing, is like I'm trying to figure out where the bottom is. But I know that it's not as important as, yeah, there it is. It's the exact same thing. I mean, it's almost identical. That's spooky, right? And this comes off of that top, those like little 4 points right there. You know, if you hit that top and you go through those little 4 points, you see this as being like driven down at that extreme. So we already know like that's the case. It's not a, but for me, it's not a huge question in my mind at this point. I'm kind of like, yeah, I know it's traveling down to this original cat ear line. And I talk about those cat ear lines a lot. And I already knew that first one was probably the most important, but it's a difficult one because there's multiple ones here. 1, 2, 3, 4. They're all kind of pointing to the same spot. But that's just the low. That doesn't give you this, which is like, where would you go back to if this kind of waveform completes, this rotation completes? I'm still not quite there. I want to be there with an answer, but it's a mixed bag because AMC has a couple possibilities. So one is that this is basically flat. I mean, frankly, if you look at where the election was, it's strange, but it's essentially just a flat mark from here to that September middle, which tells me that you wouldn't necessarily go anywhere past $14 into the election. And that's not a lot, but it is a move, you know. It's a pretty decent move. It's just not the move that we've been looking for, because we've been looking for something that's like significantly larger. Still 500%, but that's going up to $14. That goes pretty much hand in hand with what I've seen on and what I was predicting using the slingshot method here, because that told me that we would go to 14 and then back down to like 1. We didn't actually go there, you know. And so that I was like, oh, I'm wrong about that. But the 14 targets come up more than a couple times. And now it's coming up again as a matter of measurement, which is kind of strange. So that seems to be one possible target. The other one is a little bit, I would say it's much more bullish. And that's the one where you have it almost seems absurd, but that's the one where you have a move from, I guess, from like election point through the middle. And it would have to be here. And oddly, that's the cat ear one, right? So that's the one that we're talking about as a, like, does the cat ear show you that midpoint of the cat ear? Does it show you a potential target in the future? It definitely did for GME. But how did it get there, and how long did it take? It took a really long time. Years and years and years and years and years. So before going crazy and saying this is what has to happen, probably be prudent just to say that, yeah, it did happen on GME for sure, but it also took a really long time. And then when we go to AMC, we didn't really test that out. So these are very different targets. Unfortunately, it kind of just depends on what you think about yeah, I mean, and you can see the extension downward here. I mean, none of this really adds up to going beyond that point. You can see this did obviously go beyond it on this side, so it's possible. Maybe the 5 up to 8 is that extension. And that's it. That'd be the finishing of your rotation. So let's check this out on AMC really quick though. I'm kind of curious. I already know there's a trend here. Like that's been on my mind for a long time. So this is that cat ear marker. So what a cat ear is to me is it's a distributive action, right? A distributive top. And then the midpoint of that is hard to identify. What I did is I measured from bottom to top, but then I used the length of it, which is going to be highly debatable because it's like, does it go to here or does it go to there? I don't know. You know, it's really debatable. I think it's going to be the next top breakdown right there. And then I'm using that as like a guidepost and looking back here. And I'm trying to see if that makes sense of the next all-time high, and it does. Do you see that? So this is how you could mark out the cat ear. I mean, it works. So it worked on AMC, it works on GME, at least for the target here. The reason that's significant, in case you're wondering why I care about that, is that this is one of those moments. Now, I know it's a kind of a difficult one to sell, because if anything, it would make you think that this has to rocket. I don't think it's that complicated though. I think it's pretty straightforward. Like there's a low that was hit during the COVID sell-off. And then I think what happens is that in the election, we establish a trend. And this is where you have like the beginnings of a wave. So if I were defining it strictly speaking as like a sine wave, COVID is a way of defining, COVID and the election were a way of defining a waveform here. And then beyond that, the reset is brutal, but that's where you can go into other things like, I think there's a creek retest and other stuff, and why they're all so dramatically different, because there's no similarity beyond that. I mean, you could talk about RSI, which we did. You could talk about just the election stuff only, and you could talk about what that would mean for those individual stocks. You could talk about fundamentals, you know, short interest, yada, yada, yada. I think at that point, you'd have to kind of take it apart and unpack the whole picture better. But I know this is true. In both cases, for GME and AMC, this original distribution, the 50% mark on the cat ear, if you use the original trend plus the 50% mark on the cat ear, you get the future high. I know that there's going to be other people that say, well, dude, that's just a fib, but something that's a repeatable phenomenon in sine wave mathematics shouldn't be ignored. Like, to me, like it's repeating, and I've seen it more than a couple times now. So I'm like, okay, so there's clearly something to it, right? We can look at smaller cat ears like these guys, and we can do something similar and see if they work. You know, there's all kinds of possibilities here. You know, I could take this guy and I know I'm not doing it perfect justice, but I could look at this and say, all right, well, if I go from that 50% mark back down to the original trend, does it give me the all-time high? And we already know it's pretty darn close. It seems to be pretty effective.